Buffett has, on a number of occasions, talked about his criteria for value investing. And they're pretty straightforward. Let's bring them up for everybody. A consistent return on equity, really important, that the ROE be greater than 15%, and that it averages an ROE of greater than 15%, that it's conservatively financed, right? A debt-to-equity ratio of less than 1, and that there's this famous Buffett margin of safety, right? A price-to-book ratio of less than 1.5, and a forward price-to-earnings ratio of less than 20, meaning that investors haven't gotten too excited about it. Perhaps one of the reasons Buffett has for so many years stayed away from tech.
Right, exactly. I mean, so you've laid out 3 specifics, but then there's kind of the generalities. He wants to understand these businesses.
Right.
So he's never gotten, as you point out, he's never gotten into technology. He admits candidly he doesn't know, he doesn't understand social network, he doesn't really understand technology. So there are probably businesses in the technology space that fit those categories in terms of ROE and the safety net, but he's never gone there. So then you got to start looking, okay, what's big and what's safe and meets all this criteria, and what would Warren understand?
Well, we ran the screening. That's one of the things that we can do here at Bloomberg, and we got some answers. And the truth of the matter is that there aren't too many companies that meet those criteria. In fact, the biggest of these companies is called HollyFrontier. It's a refiner, it's a transporter, and a store and marketer of petroleum products. And that's at $9.3 billion. So Buffett, who has some $22 billion of cash that he would like to spend so that he has no more than a cushion of 20, couldn't even move the needle with that, and that's the biggest on the list.
Right, right. I mean, we've looked at some others in the past that are bigger, that have met the criteria. We looked, for example, earlier this year in a real M&A column, and we noted 2 that were of size. One is Grainger, big industrial products company. At the time was worth about $15 billion, I think now closer to 20. So that would fit a lot of his criteria. And a big pie in the sky one, if you will, and perhaps it makes sense when you look at Heinz, and we're all in the realm of speculation here.
It's all speculative.
Is General Mills. So there you're talking $30-something billion.
That's a big company, indeed.
Right, big company, consumer products. He, I would assume, understands it quite well. You know, it's a pretty easy company for someone like Warren to understand.
Well, to that point, General Mills does not fall, or our screening didn't produce General Mills because it doesn't meet all of those criteria. But Buffett has been known to break his own rules in order to get a deal done.
Right,
as he did with Heinz.
In the case of Heinz, one of his rules, again unwritten, is he doesn't negotiate with you. I make you an offer, you accept it, or I walk away. He actually negotiated with Heinz, and Heinz got a pretty good deal out of him and his partners. So
is it getting, do we know whether it's getting harder for Buffett? I mean, Buffett continues to buy things, Heinz being only the most recent example, but he bought Burlington Northern Santa Fe, he bought Mid-American, he's done tons of deals. Do we know whether it's getting harder for him to find multi-billion-dollar companies?
I think it is getting harder. First of all, the market in general is up this year, so it's difficult to find...
Valuations are high.
Exactly. It's difficult to find things that are inexpensive. Companies that are underpriced, activists might have beaten him to the punch. So that's also maybe knocked some candidates or taken some candidates out that he might have looked at in the past. There's another company that doesn't get talked about a lot, another healthcare company called DaVita. It does dialysis, kidney care, and he owns a big stake in that one. So that's another one I think people ought to keep an eye on. He owns 14-15% there, and he likes companies he knows well. If he's got that big of a stake in DaVita, odds are he knows it pretty well.